Hi, Larry Gaines, Paracycle Trading. Well, when you look at trading, and if you've been a trader for a long period of time, you realize that trading is a business of probabilities. And to be a successful trader, controlling your risk is really what's going to win the game for you. So knowing and better understanding how to manage and control your risk is really going to make a dramatic and positive difference in your trading performance. And one of the best ways to do this is through the use of options in your trading. So I want to show you a trade setup on Apple. Apple's gone crazy to the upside, but you want to measure the probabilities of where can it go and approximate risk that you're taking. So let's take a look at this trade setup. So this past Friday on the 5th we saw Apple, and it was starting to take a move back up. So we were deciding what kind of trade do we want to do for Apple. Well, the first thing we looked at, well, where can Apple go? So the first target we had for Apple was that the first target would be up to 150. So a number of different reasons, but one reason was because there's some pretty good unusual option activity at 150, and then the other place was at 155. So I didn't, look and envision Apple having this big of a move today. So we just set up a trade for a move to 150, and we did it under a very controlled, low-risk option trade strategy. And that's one of my favorite strategies that I'll show you, is using what we call a ratio butterfly. So we were looking for a move to 150, and we were looking to do it on very minimal risk. And then this is a structure that we set up. So on Friday, when Apple actually pulled back a little bit, we bought this is for the May 12 series, and this is expiring this Friday, the 152.5, 150. So this is a put debit spread, and then sold two bull put credit spreads at the 150, 148. So this is what we call a ratio put butterfly. So it's 1 by 3 by 2. Now the really cool thing about this is we were able to get into this trade for a 70-cent credit. See that? So the risk then is right here. The maximum we could lose if everything went wrong would be $80 per spread. The maximum profit, we're going to have profit from $70 credit. So profit from $70 all the way to max profit would be up here at 150, and that's going to give you a profit over 300 if it was to expire there on Friday, this Friday. And then you keep going, you keep profiting right here. It went out today at 108.66. So today, one spread with this setup is up $108.55. And now the worst case scenario, if it keeps going up, is you make $70 credit. So if it passes this level here, this is kind of your break-even point where it stops making any more money, and you're locked in 70 cents, and that's at 159.70. So I like this type of probability trade setup, and you can see today it went from a 70-cent credit when we put it on Friday, flipped to a 39-cent debit, so that gives us a profit of over $108 for just one spread. So you do the math, and you look at the probabilities. I like those kind of odds.